When companies cut costs by automating jobs, they risk wiping out the very consumer base they depend on. In this video, we'll explore why today's corporate cost-cutting could undermine tomorrow's customers, and how this cycle threatens the entire economy. The 2025 automation boom. The pace of automation in 2025 stands out not just for its speed, but for the breadth of its impact. Around 40% of jobs worldwide now face significant exposure to AI-driven automation, a sharp increase from just a few years ago. This transformation is no longer limited to factory floors or assembly lines. Instead, it cuts across industries, from manufacturing and customer service to banking and logistics. The numbers behind this shift are hard to ignore. For instance, McKinsey estimates that the productivity potential of AI and automation could reach $4.4 trillion globally. IBM reports that 77% of businesses are already integrating AI into their processes, and McKinsey found that 92% of companies plan to increase their investments in AI technology. The manufacturing sector, once a reliable source of stable employment, now faces some of the highest automation risks. Research shows that nearly 59% of manufacturing activities could be automated with current technology, and up to 20 million manufacturing jobs worldwide could be lost to robots by 2030. Machine operators, assemblers, and welders, roles that involve repetitive, predictable tasks, are being replaced by robotics and AI vision systems at a rapid pace. In parallel, customer service is undergoing its own transformation. Call centers that have implemented AI-driven chatbots and virtual agents report headcount reductions of 26% within a single year, according to a Metro GA survey. In e-commerce, 36% of live support roles have already been automated away in companies with more than 200 employees. These changes aren't limited to blue-collar jobs. In the financial sector, AI algorithms now handle many clerical tasks, from processing transactions to basic risk analysis. Bank tellers and loan processors, once seen as secure positions, are increasingly redundant as customers shift to AI-assisted digital banking. Similarly, in retail, self-checkout kiosks and automated inventory management have led to steep declines in traditional roles. In the United States alone, jobs for retail salespersons and cashiers are projected to shrink by over 600,000 each by 2030. These are not distant projections. They reflect a present reality where technology is rewriting the rules for millions of workers. The financial logic driving this shift is difficult for companies to resist. Automation promises immediate reductions in labor costs, increased productivity, and higher profit margins. Walmart's use of autonomous shelf-stocking robots has saved millions per distribution center each year, while AI-powered checkout systems at Target have reduced cashier hours by nearly half in pilot stores. For shareholders and executives, these numbers are compelling. Yet, few companies consider the broader consequences. Only a small fraction conduct economic impact studies that look beyond their own bottom lines. The focus remains on short-term gains, cutting jobs and boosting efficiency, without accounting for the long-term effects on demand. The result is a growing disconnect between efficiency and sustainability. As more jobs are automated, the pool of consumers with disposable income shrinks. The very workers who once powered these companies as both employees and customers are being pushed out of the economy. Unlike past technological revolutions, which played out over generations, the current wave of AI-driven automation is unfolding within a single decade. The Bureau of Labor Statistics notes that since 2020, automation has already erased millions of jobs, with losses concentrated in office administration, customer service, and transportation. The effects now reach into roles that require advanced education, not just manual labor. This rapid shift raises a fundamental question that today's executives rarely address. What happens to demand when so many workers are left behind? The answer is not just a matter of corporate strategy, but a challenge to the entire economic system. A challenge that echoes lessons from history, which some leaders have forgotten.